What's going on, everybody? And in this video, we are going to be talking about a stock that is a high value play. We're going to be talking about a ton of different things that this company is doing. I mean, they have had a massive recent downfall, as you can see, going from about 87 a share at the beginning of December. And then with today being December 11th and the stock already back down to 79. We're going to talk about why I see this as a value play, a ton of key indicators and a ton of key metrics that I do believe can send this company a very good returns to your portfolio over the long term. But remember, everything I say is not financial advice. Be smart with your money, only invest what you can risk. But let's go ahead and get straight into the video. But before we do that, please subscribe to the channel and turn on post notifications so you don't miss out on any of my future content. But the stock we're talking about is South State Corporation, ticker SSB. Now we can just see, I mean, they did hit a level of resistance, at about 91.67 3 times. They hit it in the middle of October, then they hit it at the end of October, beginning of November, and they hit it again in the middle of November, and then they did start to come down, trading with some negative momentum right now. The MACD is not looking too hot. They did fall through the 20-day moving average and the 100-day moving average, which is pretty bearish, but I'm not saying that this is necessarily a day trade or a swing trade. This is more of one of those stocks that you would invest in and hold for the long term and for the value play, something like Warren Buffett would do. So to show you also a little bit of sentiment, is this is a financial stock, they're a commercial bank doing a ton of loans, different things like that, but the entire financial sector pretty much has fallen over the past week about 2.8%, and South State fell about 6%. So it is a deep margin of falling, but I kind of want to show you a little bit more about who this company is. So to give you a little overview, they're a financial services company headquartered in Winter Haven, Florida. Charter Bank subsidiary provides consumer, commercial, mortgage, and wealth management solutions. So pretty much just your average commercial bank doing different things like that. And they have been rated pretty good. So let me show you their website, personal, mortgage, small business, commercial, wealth. You can borrow, invest, open an account, bank, pretty simple. They're kind of upgrading a lot of things, alerts, being very technological. They did talk about in their most recent investor presentation that they want to increase digital implementation into their company, but this is just a nice little overrate on their company, about 5.27% APR for car loans and the different rates that you can get with this company. So let me show you a few metrics on South State about that I really like. They do have a market cap right now sitting about 6.1 billion, a PE of 12.8, which is very low even for a financials company, and a forward PE of 9.57, predicting that earnings are going to be really good over the next year. They do also pay a dividend right now of 2.51%, which is very solid. I'll show you right here. They have been paying a dividend and increasing their dividend for the past 11 years with a 5-year growth rate of about 8.45%, leaving them with a payout ratio of only 29%, which is very low. Nothing to be worried about this dividend getting cut anytime soon, assuming just looking at the financials alone. And lastly, I want to talk about the target price. $100.14 is very, very good on the target price, especially when the company is only trading right now for $79. That's about a 20% return just based off of analyst ratings, but do not just go buy a stock simply because an analyst likes it. So let me show you a few things that came from their most recent investor presentation. This is kind of an overview of the company, like where they're located, a lot on the southeast of the United States, about 45 billion in assets. Right now they've got 29 billion in loans, 38 billion in deposits with a $6.5 billion market cap, which is a little bit lower as we saw on FinViz. To show you a few more things from highlights of the recent quarter. From the second quarter of 2022 to the third quarter of 2022, net income increased a lot, earnings per share increased a ton, return on average tangible common equity, 18%, very good. We're seeing a lot of good things happening with this company. So to show you some more highlights, loans increased 901 million, which is a very good growth rate. The more money that they loan, hypothetically, the more money that they bring in, the more money that they can pay their shareholders, and the more value is brought into this company. Now, another thing to keep in mind is average deposits did decline by 384 million, which is about 4% annualized. The less deposit they have, the less money that they have to loan out and different things like that. I would not take this as a major concern, though, as they just have so much money and it is a decline. But there's a lot of different things happening in the financial world right now. People with their money, people taking money out because of savings and different things like that. But that is something to keep in mind. And then right now they have an 8.1% revenue growth with only 0.4% expense growth. So they're able to, as of now, increase revenue pretty well with increasing expenses very lowly. And that did give them a 7.7% operating leverage in the third quarter. That's very, very good. Let's go ahead and show you a little bit more, just kind of like their PPNR per diluted share is looking very good, increasing 47% increase over the past year, and their PPNR per diluted share, which is very, very good. Now, I want to show you a few more things. I mean, right now for Yahoo Finance, the company has a profit margin about 30.42% and an operating margin of 44.79%. If you look at another similar company like Wells Fargo, it's about 21 and 27%. And then furthermore, the quarterly revenue growth is about 6.6% year over year and 8.4% for quarterly earnings growth year over year. For Wells Fargo, both these numbers are negative at negative 7.5% and negative 31.1%. So South State is definitely doing something right compared to competitors such as Wells Fargo. Another thing I like is the free cash flow in this company is very, very solid. Increasing year over year, trailing 12 months, looking very good. We can look quarterly and show you a little bit of a deeper insight. A little bit all over the place. I mean, getting lower to high to low to super, super high. So we're looking pretty good over the past quarter, at least right now. I do see a lot of upside potential in this company. Show you some more things. Earnings estimates from 2022 to 2023 are expected to grow at incredible rates. Average estimate on revenue is expected to grow as well from 2022 to 2023. About a 13% revenue growth is the estimate, which is very, very good, especially for a company like a bank. This is something that you'd almost see on like a tech stock per se a lot of the time, especially in economies like right now. But lastly, I'll show you Truist did recently take a $103 price target on South State, and they revised it to 96, which is still about 18% higher than the price that it currently is. So we're looking very solid on this company. I do see a lot of upside potential, at least in my personal opinion. Right now, I am not buying the stock just because the cash in my portfolio is being used to invest in stocks that have already been invested in, different ETFs. I'm not looking to add anything new to my portfolio, at least right now. So I'm saying this, but there's a lot of different things going on in the market, so make sure to keep that in mind. If you like this stock, go do some more research and all the different things. But if you enjoyed the video, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future videos. Thank you again for making it to the end of this one, and I will see you at the next video.